Hi everyone, thanks for watching. It's been a few months since my last video. We welcome a newborn into the family, so life got a little busy. But during that time, I kept refining my system. And today I want to talk about the journey that got me here. This is not really a video about coding, it's more about how I ended up deciding that automation was necessary in the first place. Because I wasn't an automation person from day one, I started the same way a lot of retail traders start, curious, excited, honestly thinking this might be easier than it really is. So, in this video, I want to walk through that journey from day one, how I started, what went wrong, what I misunderstood, and why that eventually pushed me towards automation. So, okay, so how it started? Actually, it really started through a friend. We were following someone online who was day trading, and in the very beginning, I had almost no real understanding of the market. I didn't even know basic things like what short really means, what long really means, or how quickly things can move against you. Well, at first, we were just following and copying trades. And honestly, that part is almost funny to look back and now because after just a couple of weeks, I started thinking I understood trading. And that's the dangerous part. When you get a little exposure and maybe a couple of wins, it can create false confidence very quickly. I started feeling like this was easy money. I started thinking maybe I could do it myself. I even started judging the guy we were following. Like maybe he entered too early, maybe he exited too fast, maybe I understood the trade better than him, which is crazy. If you think about it, after just a few weeks, I thought I knew trading. And that false confidence is what led me to the next slide, basically. So there was one trade in early 2021 that really changed everything for me. It was supposed to be a day trade. He went short here around $60. Um, he went short. The price spiked hard against the position. He exited quickly. I did not. I thought I knew better. I thought it would come back. I thought maybe he got out too early and I could hold through it. So instead of treating it like a day trade, I held it. So broke the rule here. I held it for 3 weeks, and that decision cost me heavily. Of course, you can see the chart, and this is the daily chart. The important part is that it wasn't that the strategy itself failed; it was that I broke the rule. I turned a defined trade into an emotional trade. And that was one of the first time I realized how dangerous overconfidence can be. But what I did do, I trying to win it back. That's the escalation phase. I didn't stop, of course. I wanted to win it back. That's where revenge mindset started to kick in. I kept thinking maybe I just needed a different product, a different market, a different type of trade, or maybe different guy to follow. So I added more capital. Then I moved into options because I wanted faster returns. That doesn't mean I had the real edge. No, I just wanted the faster return, and that really what it was. I wanted to recover quickly. Uh, Same thing happened. Overconfidence, emotion loss. Then I got pulled into GME hype. If you remember back in 2021, a GME short squeeze, I had one of those fast wins that feels amazing at the moment. Made $8,000 in around like 30 minutes, and then I lost it all in 2 weeks. But that quick win was actually dangerous because it reinforced bad behavior. It made you think maybe I was that kind of trader. Maybe I could do these high risk moves and get away with it. Then I moved into futures, added about $10,000 and lost that too. So by that point, I tried all these products, multiple styles, multiple level of risk, but guess what? None of it worked, and that was when I had to stop and ask a harder question: what is the real reason? What is the real problem? And this was the most important realization for me. The problem wasn't the market, of course. It wasn't the strategy. Definitely wasn't just one bad trade. The real problem was that the gap between signal and execution. Uh, there is always this gap when you're doing manual trading, no matter if you're following someone or you're doing your own strategy. And within inside this gap, there is emotion, fear, false hope, greed, and hesitation. um, that was that's where the damage was happening, right? I wasn't consistently losing because I couldn't find a setup. I was losing because once the setup appeared, I was still in the middle of it, like thinking, overthinking, overriding, delaying, hoping, changing the setups in the real time, like the decision making in the moment. And that was the real issue. So for me, this becomes less about finding a perfect strategy and more about reducing this gap. And to my understanding, I think it's manual trading that leaves this room for human weakness. Um, so this was the turning point for me. This was the turning point for me. Yes, because coming from a quant, math, and optimization background, my natural instinct was to optimize the strategy. What was the best indicator? What was the best parameter? How can I hyper tune the parameter? What is the best in sample, out of sample? What is the best objective function? How can I backtest better in Python? Like things like that. But and to be clear, those things matter, of course. Prediction matters, research matters, strategy matters. But I realized that even a decent strategy can fail badly if the execution layer is unstable. But so my thinking shifted from what is the best strategy to what is the best system. How can I engineer the process? How can I remove emotional uh, interaction? How can I remove myself from this process? So that shift from prediction to system design changed everything. So once I had this realization, I started building around it. So the system is pretty straightforward. A trading view, like the strategy in trading view alert, generates an alert, and that alert goes through a webhook and via AWS API gateway, a Lambda function process the alert using a broker API, which is TradeAwait here, and it connects to the broker and sends the signal, um, and then trade executes in less than a second. And the speed is not the goal, the discipline is. For example, if this meant to be like using this automation, if this meant to be a day trade in future market, then by 4 p.m. the position is closed. No debate, no hope, no last minute emotional decision. So it's really in a structure. It's a discipline. It's consistency. So what I came to know, like in a hard way, is that many retail traders, including myself, focus more on the prediction rather than the system design. You can have a decent strategy, but if your execution is inconsistent, your result will be inconsistent. So automation solves several things. You know, it removes hesitation. If a signal is valid, the system acts. There is no extra emotional delay. Uh, it reduces rule breaking, of course. It creates consistency, and I believe that consistency matters most. Like in the long run, you can gain, right? Your gain is in long run rather than just short wins, right? It helps enforce risk management and many benefits. So you know, and I think the most important thing is that automation reduces the space that I was talking about, where emotion can interfere. What is next? So I'm going to break this down in future for you. I'll be releasing more videos on the execution layers, how I built this, so that together we can build a real system. Thanks for watching. Stay tuned.